In how many years are you able to double the money?
The US-based fund so far has delivered a net return of around 71%. In India, 3 themes which I'm very bullish on: AI ancillaries, so power, transmission and distribution, data center. Second theme is the weight loss drugs phenomena, or the GLP-1 drugs across the world. This is poised to become $100 billion industry by 2030. And thirdly, because of all the geopolitical conflicts which are increasing across the world, because of the US vacating Big Brother mentality from various parts of the world, it's now basically telling everyone in Asia and Europe, increase your defense spending as a percentage of GDP to 5% of your GDP. Big learning from markets over time is look out for companies releasing their first ever investor presentation or hosting their first ever conference call, because that means that now the promoter is getting interested in market cap creation and wealth creation both for himself and the shareholders. If you look at any big name on Dalal Street, Mr. Ramesh Damani, Utpal Seth, Ramdev Agarwal, Manish Chokhani, or even Chandrakant Sampath, all of them just have one common thread: a relentless belief in the power of India, its future.
All these names that you say कि ये कॉमन थिंग है इंडिया पे बोलो ना, लेकिन जब आप कुछ नंबर्स ऐसे देखते हो कि आपके पास 17 करोड़ डीमैट अकाउंट है, लेकिन वी आर नॉट सीइंग कि 17 करोड़ डीमैट में से कितने लोग ट्रांजैक्शन ही नहीं कर रहे हैं. 22 करोड़ तो ड्रीम 11 पे 10 रुपए का ट्रांजैक्शन कर रहे हैं. 80 करोड़ लोग हमारा फ्री राशन ले रहे हैं. तो हाउ डू यू स्टिल रिमेन इंडियाबल व्हेन यू डोंट सी एनी स्ट्रक्चरल चेंज हैपनिंग इन ऑर्डर टू गेट दीस पीपल आउट ऑफ पॉवर्टी?
There are certain risks to the India story.
This company called Raj Ratan Global, इस कंपनी में आपने आज तक सबसे ज्यादा पैसा बनाया. Is it true?
Yes. When you come to the stock market, you have to think really, really big. This is a place you have to think in terms of not just changing your car. You have to think in terms of you can change your house.
You basically figured out the positive asymmetry of compounding, where the upside is convex and the downside is concave.
Let's say that you have 2 stocks. One grows at 26% for year 1, and the other one falls by 26% for year 1. The end result is 0 for year 1. If this happens over 10 years, what do you think would be the end result in your portfolio? It will be 17.6%. I diligently go through all the announcements on the Bombay Stock Exchange website. So I go through press releases, investor presentations. If you're tracking steel industry, you look at steelmint.com. If you're tracking commodities, you look at platts.com. Phenomena which often plays out in the Indian market post earnings announcement drift. Sometimes when there is a big acceleration in top line growth accompanied by margin expansion in a particular company, even if the stock goes up 5-10% next day after earnings, the stock market is generally a bit slow to revalue the stock to the right higher level. So you get plenty of time to accumulate the stock the very next day and still make handsome returns from there. The Western world, after many decades, talking about reopening nuclear power plants. I mean, nuclear was a bad word for the last many decades, right? Now, because of the AI power demand and the boom, these hyperscalers like Google, Microsoft, Meta, they're announcing hundreds of billions of dollars in capex.
AI बड़ा होगा तो AI के लिए पावर चाहिए होगी, पावर के लिए पानी चाहिए होगा, पानी के लिए वाटर ट्रीटमेंट प्लांट चाहिए होगा, वहाँ पर हम इन्वेस्ट कर देंगे. Which is your highest conviction bet?
So if you look at the value figure threads of stocks like Mayur Unicoaters, Ajanta Pharma, Astral Poly, you'll notice that.
Tell me about a company or a stock which nobody has heard of, but you are betting high on it. Unknown, undervalued, neglected.
And one of the cleanest proxy plays to play the manufacturing upcycle over the next decade is CNC machines. There's a stock which we hold in our India called Engineering.
What's the best way to reach out to Gautam Baid?
I think the best way to reach out and connect with him is...
Hi everyone, I'm your host Shivank and we are part of the 01 Network by Zerodha. Together, we intend to bring you insights from the top thinkers in the field of entrepreneurship, technology, and investing.
But Atlanta ही क्यों choose करा आपने?
Starting a hedge fund in the US, 2 states ऐसे हैं, Illinois and Georgia. Illinois के अंदर Chicago आता है और Georgia के अंदर Atlanta आता है. In those states में, when you set up a hedge fund, you do not have to register your fund with the state as an investment advisor. So the regulations are very low and very easy in these 2 states. So Chicago and Atlanta में बहुत easy था ये business start करना and operate करना.
Very interesting.
And third option is Miami as well. तो अभी recently Miami में भी rules relax हो गए तो Miami, Florida में भी चाहूँ तो shift कर सकता हूँ my address. तीनों अच्छे हैं, Atlanta, Chicago, Miami, all are good.
So Chicago से शायद आप एक बच्चे को और जानते होंगे, मल्हार मानिक.
He messaged me just परसों only about some article of his getting published in somewhere. Messaged me परसों.
So Malhar might be coming. हम साथ में थे वहाँ पर.
अच्छा, oh, that guy is also super high energy and very smart.
He interned with Utpal Seth sir when he was 14 years of age.
मुझे पता है.
Right now he's working with Christopher Beck sir, who teaches a very famous course of security analysis in Colombia.
Yeah, I know. Very wise, very wise kid.
How? Why do you say that? I really want.
Still my interactions with him and he दिखता है ना the enthusiasm for investing, his threads on value picker जो लिखा है उसने.
Insane. It's insane.
इस उम्र में इतना wisdom मतलब.
Warren Buffett को रीच आउट करने का व्हाट्स द बेस्ट तरीका? आई हैव हर्ड कि आप लेटर लिखते हो उनको ऑफिस में So he generally always replies.
तो अब तो शुरू कर दिया उन्होंने रिप्लाई कर, पहले तो जब फर्स्ट टाइम भेजा था तो मुझे कोई उम्मीद थी नहीं कि जाएगा, बट चमत्कार हो गया. I think the best way to reach out to Warren Buffett and connect with him is just to be genuine and as authentic as possible. In my case also, when I wanted his permission for including his copyrighted content from his shareholder letters in my book, I just sent him the manuscript of the book along with a very heartfelt letter. And wonder of wonders, he actually not only gave me the permission to include his content in my book, but he also wrote a handwritten note to me with words of praise for the joys of compounding. And that really elevated the visibility of the book multifold, because when you have the world's greatest investor of all time actually complimenting your work, then obviously people, that automatically gives you a lot of credibility in the publishing industry automatically. And then after that, just through sheer word of mouth, the Joys of Compounding today, is now an international bestseller in 8 countries in the world.
So this was just after publishing, and because earlier you published the book, it was self-published.
Yes.
And मुझे बताओ jump कितना आया? As soon as Warren Buffett, gives the credibility to the book, he said, "Okay, this should be the success." What was the change? कितनी book से कितनी book?
So the self-published book basically sold around, I would say, 5,000-6,000 copies. But after Buffett's approval and after the word of mouth for the Joys of Compounding, today, 5 years later, we are standing at more than 100,000 copies sold in the world. So it's a big jump from 5,000 to 100,000.
एक book पे एक author, how much does he make?
So see, honestly, the royalty per book, if I just give the numbers, it's very abysmally low. It's not, and it's basically $1 per book, you can say. That's about $1 or $2.
Which comes to how much percentage of the entire
10%, 5 to 10%, depending on how much you negotiate with the publishing company, you get around 5 to 10% of the MRP of the book. But the big picture here for people who want to build credibility and build a brand before starting their professional business, just focus on the content in the book and just put in as much effort as you can into building a superlative book, because once your brand is established, then you will not really focus on the amount of the royalties that you're earning. These books, these speaking appearances, podcasts, these various courses which you offer, or the blogs which you write, or the YouTube channels that you start, all of these act as a funnel to, basically building visibility for your business, for your brand, for yourself as an individual. You also attract like-minded people into your life as a result of this visibility and leveraging the power of social media. So I think when I self-published The Joys of Compounding also, I thought, probably it'll sell 100, 200 copies. It'll help some people. And more importantly, it'll help bring some like-minded people into my life. That was the simple intention when I self-published the first edition of The Joys of Compounding. But when you help other people unconditionally, for example, I charged 0 royalty for the self-published edition of The Joys of Compounding. I did not charge anything. But when you help others unconditionally, the universe works in such a way so as to come back and reward you back multiple times over. That is exactly what has happened with me in my life so many times.
So 3 things. Number 1, so पहली बात ये visibility वाला कोई नहीं बोलता. Nobody says, truth, here we are doing this for the visibility. Thanks for doing that. One thing that I love about you, and one of my reasons to learn from you, was this alignment. That, even the fund that you run is like, the structure is like 0 management fees and, whatever, 20% thing, which nobody does. Most of the people or wealth managers that I meet, they have a, crazy, insane target towards, AUM and then the management fees, and then they are sorted for life. But that I genuinely appreciate. So, and also one thing, so आपके Twitter profile पे जब जाते हैं, वॉरेन बफेट का एक लेटर आता है. मैं उस लेटर पे अगर genuine, जो अच्छा आपने बोला, being very honest, being very humble, if you write, so there are chances that Warren Buffett will reply. Very interesting. And second thing is, so you have made around $100,000 from the book High Tattoo. After reading, मुझे जितना समझ में आया मैं उसको culminate करता. इसमें please edit कि you invest in fundamentally strong business. Number 1, from variant, and you play variant perspective plays. Number 2, you also, in 80% of your portfolio is like long-term structural trends. Correct. Is it true?
Yes.
How many stocks are there in your portfolio?
We hold between 20 to 25 stocks at any point of time, diversified across industries and risk factors, both in Stellar Wealth Partners India Fund, as well as Complete Circle, Stellar Wealth PMS. In both the portfolios, that is the number that we hold. And I'll also explain the reasoning behind this number of holdings. 20 to 25 is the optimal number of holdings to maximize the risk and return trade-off. As per empirical data published in a study in the international bestseller, A Random Walk Down Wall Street by Burton Malkiel, it was proven that as the number of stocks in a portfolio reaches 20 to 25 names, the incremental volatility reducing benefits of diversification reach near zero. So this is the sweet spot for an active investor seeking to outperform the market. At 20 to 25 names, you have captured all of the benefits of diversification, while the number of names you need to track and know thoroughly is still manageable.
Very interesting. And out of these 20 to 25 stocks, 80% are long-term structural trends. And 20%, approximately 20% are, variant perspective plays. ये दो चीज को मुझे decode करना है आज. And this will be the first step. Help me understand what is long-term structural play.
So long-term structural trends are found in industries with a very favorable structure. They're organized like a monopoly or a duopoly or an oligopoly at best, and they are experiencing some form of an industry tailwind. They are also characterized by consistency and predictability of cash flows and a long runway. So you can basically put the bulk of your capital to work for long-term compounding to play out in such kind of names. And today in India, for instance, there are multiple structural long-term plays available in the market. The two prominent ones being financialization of savings and branded discretionary consumption. Along with that, three themes which I'm very bullish on in today's environment for the next 5 to 10 years. First one is the artificial intelligence or AI ancillaries. So power ancillaries, transmission and distribution, data centers. These are the first categories, all the AI related ancillary plays. The second theme which I'm very bullish on is the weight loss drugs phenomena or the GLP-1 drugs across the world. This is poised to become $100 billion industry by 2030. And in India, we do have a few listed plays which basically make those complex drug delivery devices for these GLP-1 drugs. So that's another theme which I'm very, very bullish on. And thirdly, because of all the geopolitical conflicts which are increasing across the world, because of the US vacating, its big brother mentality and just vacating from various parts of the world, it's now basically telling everyone in Asia and Europe, increase your defense spending as a percentage of GDP to 5% of your GDP. So that investing is all about the rate of change. If these countries in Europe and Asia increase their defense spending from 1% to 5%, you can imagine the rate of change is 300 to 400% that we're talking about here. So the size of opportunity is massive. So it's very important for investors to resist anchoring bias that, just because the stocks have gone up 5-10x in the last 4-5 years, doesn't mean that the story is over. If you do your research, there are still some very promising plays in the defense space. So defense, weight loss drugs, and the AI plays. These are three themes which I'm very bullish on, along with the standard themes like housing finance, gold financiers, and contract manufacturing, because low-cost manufacturing is in India's DNA. So there are many, many long-term structural growth plays in the Indian market today.
तो हमने structural trend समझा कि यार इंडिया इज अ डायबिटीज कैपिटल ऑफ द वर्ल्ड. ओज़ेम्पिक का यूज यूएस में थ्रू द रूफ. Semaglutide को the drug delivery thing is with a couple of companies. Now this is a long-term trend, right? Structural trend that you identified. How do I bottom down to a specific company or a stock from this? And first thing is, how did you end up figuring this long-term trend at the first time, for the first time? What was the starting point of this trend? And then once you have identified the trend, once you believe in this trend, and I genuinely believe, India is diabetes capital of the world, सब कुछ चाहिए होगा. How do I pick down, how do I, bottom down to one particular thing?
Very good question. So I'll go top down and then I'll go bottom up. So as an active investor in the market who's into this full time 24/7, and when you're engaging in so many discussions with your peers and colleagues on a daily basis, and you're following global markets and all the global news, and by definition, most of the investors across the world do track the US markets because most of the mega trends of the world tend to originate from the US. So just in the US, when Novo Nordisk and Eli Lilly started putting hundreds of billions of dollars to work on R&D for these weight loss drugs, as an active investor, you do understand that eventually, if this turns out to be a success in the Western world, it will eventually come to India at a discounted price. That's what happened. That is what has happened recently as well. So once the big picture is clear, then what you need to do is basically go through your different sources of idea generation, and then that is how you start filtering these ideas. For instance, I'll just share a few sources of idea generation which I tend to follow on a daily basis, starting with Bombay Stock Exchange corporate announcements. Every single day, I diligently go through all the announcements on the Bombay Stock Exchange website For many investors, it's a very tedious, cumbersome work. For me, it is like an intellectual treasure hunt wherein I may strike gold at any point of time. So I go through press releases, investor presentations, the M&A deal, joint venture partnership agreements. And this is how basically this is the first port of call for filtering ideas, for starting a research on. Apart from this, I also go through management interviews on print and digital media. I also go through used screening tools like Tejori Finance and Screener.in, the two most popular screening tools in India. If you want to have deep dive research on a particular industry, then draft red herring prospectuses and initiating coverage reports are a very good source. The management discussion and analysis section in annual reports is also another very good source for industry level research. And if you want to go deep dive into a particular company, then initiating coverage reports, annual reports, and even credit rating reports are a good source for filtering ideas. Apart from all this, you can also be on the lookout for what I call breakout earnings. So there's a phenomena which often plays out in the Indian market, which goes by the acronym PEAD, post earnings announcement drift. Sometimes when there is a big acceleration in top line growth accompanied by margin expansion in a particular company, even if the stock goes up 5-10% the next day after earnings, the stock market is generally a bit slow to revalue the stock to the right higher level. So you get plenty of time to accumulate the stock the very next day and still make handsome returns from there, because generally these breakout earnings are accompanied by some big transformation taking place in the industry or in the underlying business. So that's one more source for research. Along with this you have various social media platforms like Twitter, Telegram channels, WhatsApp groups, and online forums like Value Picker and Multiply. So, if you go through such an extensive list of resources on a daily basis, then how can you not be simply flooded with opportunities all the time, be it a bull market or a bear market or a sideways market? In life, business, relationships, or investing, nothing will work unless you do. And there is no reason for anyone to settle for an inferior track record in a marketplace like India, which is filled with high quality small cap and mid cap companies having long term fundamentals. So I think this is basically how you start filtering the ideas. So basically, as for instance, there's a stock which we hold in our India fund as well as the PMS called Shelly Engineering. They make these complex drug delivery devices for this GLP-1 drugs. I got to know about this company while just going through a thread on Value Picker. So I went through. So that's one of the best sources for building historical and background knowledge on any individual business, because these threads are very, very detailed. They talk about the promoter background. There's an industry overview. There are details about the financials and last and past performance of the company. So that's a good starting point for filtering ideas. And then you go deeper dive into the annual report of the company for the last 5 years, the conference call transcripts of the last 2 years, to see whether the management has walked the talk or not. And apart from, once you've done all this, then you do a lot of grunt work. As an equity research analyst or a fund manager, you do have to do a deep dive into the corporate governance of the company. So it's not just enough to filter the idea and get the big picture right. In India, many companies are characterized by poor accounting quality or bad corporate governance. So many investors in my fund in the US ask me, how am I able to evaluate the management quality of companies in India while living in the US? So I'm able to do that by following a comprehensive corporate governance checklist of around almost 40 items are there. And I think I'll mention a few of those corporate governance checklist items to you right now. So I look for any frequent change in auditors, any qualifications raised by auditors. Is the auditor fees growing faster than revenue growth? Has the company been subjected to any CBI, Enforcement Directorate, or Income Tax Department raids in the past? Does the promoter have any political affiliations or criminal proceedings against him? What is the history of churn in the C-suite of the top management of the company? Is the promoter holding coming down? Is the promoter pledging his shares? Is the company diluting its equity quite a lot? Is the company blowing large sums of minority shareholder money on building lavish corporate offices? Check whether the related PIPE transactions are significant in size or not. What are the reputed investors saying about the company? What are the current and ex-employees saying about the company? You can get this information on websites like glassdoor.com. Check whether the promoter is running a similar business as the listed entity in his privately held company, because that may lead to a conflict of interest. Evaluate the accounting or revenue recognition policy of the company. Is it the revenue recognition policy very aggressive or not? Check for the trends in receivable days and inventory days, and make sure that the operating cash flow is positive, because positive operating cash flow is what funds your investments from financing and investment activities. So that's also very, very important. And you also check whether there's any statutory payments defaults in the past or not. And check for any off balance sheet obligations. For example, has the promoter guaranteed the debt of its other group companies through the listed entity? Check for any contingent liabilities. So there are so many items. You need to actually go through all of these when you read the annual report, and that is basically how you understand whether this company is worth investing in or not for your clients. See, when you're managing personal money or in your personal brokerage account, it's a different ball game. But when you're investing public money, managing public money, everything changes. There are basically two key things you have to keep in mind when you're managing public money. First one is the quality of the business and quality of the management. Corporate governance has to be clean. And second, there has to be adequate trading volume liquidity when you're so liquidity of the stock is also a key consideration when you're managing public money. So these two things are very, very important. You have to treat investing as a negative art. Knowing what not to do is far more important than knowing what to do in investing, because once you filter out the red flag companies, then you're left with a handful of 100, 200 companies to choose from. That is a much more manageable exercise in my view. So that's basically how you go from top up for the industry, that you get the big picture about the high growth industry and with a large addressable market size, which I mentioned to you, $100 billion for the GLP-1 drugs. And then when you go bottom up, then these are the various things that you have to look at.
बहुत सारी चीज बोल दी, ऐसा लग रहा है आपको सब कुछ रटा हुआ है बहुत। धीरे धीरे छोटी छोटी चीज पकड़ते हैं। आपने बताया पोस्ट अर्निंग ड्रिफ्ट, इसमें मार्केट स्लो क्यों होता है? मार्केट को 6 दिन क्यों लग जाते हैं? और इसका एग्जांपल बताओ।
इसमें बहुत सारे एग्जांपल्स हैं। बेसिकली like the market needs to, the company needs to demonstrate for a few quarters that that this blowout earnings was not just a one-off, and that is when generally with the second or third quarter of accelerating earnings or very good earnings, that is when the market really starts re-rating the company to a very high valuation multiple. So that is generally the story of most big multi-baggers in the market. They start off being reasonably valued, then from there they become expensively valued, then very expensive, and then absolutely expensive.
Give me a recent example of this जिसमें आपने PD post earning drift दिखा है।
This happened just I think about 2 years ago in a company called Newland Labs. Basically, they had a breakout earnings in the form of 200-300% increase in earnings per share along with big margin expansion, and the stock basically went up 5x in just 2 years from there. And this is a phenomena which plays out so many times in the market. More recent example I'll give you just from 1 year ago. It's a company called Force Motors. Neglected stock. So there has to be one more important thing in PAD is that there has to be an element of neglect. The stock has to be neglected by the majority of the public for a long period of time. How do you understand that the stock is neglected? There is no discussion about it on Value Picker, no discussion about it on Twitter or WhatsApp groups, and no research reports on the company. So basically, the company has to be undergoing a period of neglect by the investor community. That's a very essential element to get that re-rating in the stock. So Force Motors last year, they launched this new vehicle called Urbania, and that vehicle was costing less than half of the Mercedes-Benz vehicle in the same category. After that, these auto companies in India come out with monthly sales numbers. Suddenly, Force Motors started reporting year-on-year sales growth every month of 30 to 40%. From 0 to 10% earlier, suddenly you had a rapid acceleration in top line growth of the company to 30 to 40%. And the stock in just the last 3 years, if I'm not mistaken, it has become a 10-bagger in just 3 years because of this rapid acceleration of top line growth along with expanding margins. So product mix change, or basically a blockbuster product, is a key trigger that you should be on the lookout for. It happened in the past with Eicher Motors as well. Between 2012 and 2018, when the Royal Enfield became a very big hit in India, that time also a similar pattern played out. So investing is basically all about collecting these investment frameworks. We investors are in the business of collecting frameworks.
Pattern recognition.
It's all about pattern recognition. That's why real world experience in the markets is gold. That's when you evaluate a fund manager to back with your capital, you do have to see whether he has experienced multiple market cycles in the past, and whether he has accumulated sizable knowledge of industries and sectors along the way.
Force Motors जैसे था, so I was just hearing about, was it neglected because of the promoters issue? Earlier there was a promoter issue that promoters पैसा निकाल लेते हैं कंपनी से, ऐसा था. So was this the reason कि stock under neglected? What is the reason कि stock कोई भी बात नहीं कर रहा?
Promoter issues, there was some promoter issue in the past, but more than that, see, in the Indian markets I've realized this, I've been also guilty of this mistake in the past, that that there was a lot of time when I used to just ignore a stock altogether because of some past issue of the promoter. But I've realized over time, a big learning for me in the Indian markets over time is that if you look, again, I'll come back, resort to value picker to give you some examples. So if you look at the value picker threads of stocks like Mayur Uniquoters, Ajanta Pharma, and a few other Astral Poly, you'll notice that in the initial years, even these big multi-baggers had some issues, corporate governance issues at the starting of the thread. But over time, what happens is, as the earnings growth starts coming in and the market cap starts improving, the promoters themselves many of the promoters themselves start reducing or eliminating these corporate governance issues and make themselves more prominent and visible in front of the investor community. They start hosting their first ever conference call. They start coming in front of the investor community for the first time, because we have to think, why would a management be ready to put itself in front of the public? It's only when they're confident that they can answer all the tough questions. So be on the lookout for companies releasing their first ever investor presentation or hosting their first ever conference call, because that means that now the promoter is getting interested in market cap creation and wealth creation, both for himself and the shareholders.
And is it also a reason कि second generation promoter is coming and they want कि यार मैं यहाँ पर थोड़े से पैसे बचाऊंगा ये सारी चीजें करके, इससे बढ़िया I'll have much better thing in...
Because you'll get multiple on your market cap. You'll get multiple of your net income on your market cap. So the new generation understands that this market cap creation, wealth creation is far bigger than, siphoning off money from the books.
आपको बहुत सारी चीजें पता है, मेरे को नहीं पता, तो मैं आपको रिपीट भी करवाऊंगा. Again, going back to the same thing. I really believe in this thesis of semaglutide. I know कि यार $200 billions के पेटेंट क्लिफ हो रही हो इसमें. Now, कैसे पता लगाऊं कि यार डॉक्टर रेडी इस चीज को करेगा या कोई और डॉक्टर करेगा? How do I do that?
So again, see, there are industry specific websites. I missed mentioning this in the sources of idea generation. So when you're studying a particular industry, just to answer this specific question of yours, for each industry there is some dedicated websites which give you all this information. For example, when you're a healthcare analyst, then you look at a website like contractpharma.com. If you're tracking steel industry, you look at steelmint.com. If you're tracking commodities, you look at platts.com. So basically for each industry, there are one or two websites, and more importantly, there are a couple of leading voices in each industry whom you look up to, and then whenever they come on a Twitter space or give an interview on YouTube or give an interview anywhere else, you basically try to, or if they run a Substack, you try to get access to as much information from them as possible. For example, in the Indian healthcare space, Sajal Kapoor and Aditya Khemka are very renowned voices. So whenever they give an interview, which you can search for in YouTube or look up to their views on Twitter or their Substack articles, then automatically your learning curve accelerates rapidly. And that's basically how you get, even before the majority of the people are not really interested in learning. Majority of the people in the stock market are here just to make a quick buck. They are trying to do day trading or intraday or this weekly positional trading and trying to earn a few thousand rupees. Stock market, when you come to the stock market, you have to think really, really big. This is a place you have to think in terms of not just changing your car. You have to think in terms of building so much wealth that you can change your house. That's the mindset you have to come with when you enter the stock market. You have to think really big. This is an avenue for long-term sustainable wealth creation. So, that is basically the mindset with which you should come into the market.
How are you thinking big in the world of AI? I know that you have a very, you call it picks and shovel approach. कि यार AI बड़ा होगा, तो AI के लिए power चाहिए होगी, power के लिए पानी चाहिए होगा, पानी के लिए water treatment plant चाहिए होगा, वहाँ पर हम invest कर देंगे. Which is your highest conviction bet in the world of AI?
One of the highest conviction bets for sure is electrification. I think electrification is going to be the mega trend for this decade. So in electrification, obviously, all these existing power grid infrastructure, both in the US and in the Western world of Europe, for example, they do need to be replaced. They have got very aging infrastructure, which are not being able to keep up with this rapid boom in the AI power demand. So as these grids get replaced and new transmission lines are put up, so transmission and distribution is, I think a decadal theme or possibly even more. See, we are now at a stage where, the Western world, after many decades, talking about reopening nuclear power plants. I mean, nuclear was a bad word for the last many decades, right? Now, because of the AI power demand and the boom in that particular industry, you have companies like Microsoft and others now talking about tying up with nuclear power, tying up for nuclear power availability for the next few decades. So that itself tells you all that you need to do, all that you need to know. So these hyperscalers like Google, Microsoft, Meta, they're announcing hundreds of billions of dollars in capex just for building their AI capabilities, right? So that itself is telling you 300. I just made a number of 300 billion right here. There are so many more companies across the world. When you add all these numbers up, the end result is mind-blowing. So you have got a massive size of opportunity in front of you. The first big element in any long-term compounder is a large size of opportunity. I told you $100 billion of opportunity in weight loss drugs, massive. I told you hundreds of billions of dollars of spending in AI by these hyperscalers. So you're talking hundreds of billions of dollars, and look at the market cap of the companies in India which are available today. 5,000, 10,000 crores market cap. That is basically $1 to $2 billion in size. So you have to look at how big can this company grow, not just how much it has gone up in the last 2-3 years. How big can this company grow given the past track record and the size of the opportunity? That's basically what will give you the conviction to hold on through all the ups and downs of the market over the next 10-20 years, because something will keep going wrong in India or outside India somewhere in the world, because of which you will keep getting these corrections from time to time. In the first 3 months of this year itself, the small cap, mid cap index fell almost 30% each. Individual stocks fell 40-50% in just 3 months' time. Many people started talking about the end of the story, that's all over. That's not investing, because then you're getting caught up in the short-term noise. If history is anything to go by, every sharp or big fall in the Indian markets has always been accompanied by a much, much more bigger rise. It has happened every single time in the last 40 years. So I've got 40 years of base rates with me, of historical precedents with me. And that is what helps me stay the course whenever the market undergoes its periodic corrections.
आपकी बात से मैं completely agree करता हूँ. You have to be bull on India, right? But इसमें when you say कि पिछले 40 साल भर भी ऐसा हुआ है, isn't it a recency or anchoring bias कि यार पहले भी ऐसा हुआ है तो अभी भी होगा? मतलब isn't it like driving by looking at the rear view mirror? क्योंकि बहुत बार ऐसा होता है कि हम ऐसा सोचते हैं कि पहले भी ऐसा हुआ है तो बाद में भी ऐसा होगा. And sometimes we miss certain things.
हो सकता है. See, the thing is that obviously the base rates are just one aspect of the investing process. They're not everything. And I will not call 40 years of data as recency bias. I think recency bias is something which has happened just for the last few quarters or probably 1 or 2 years. But we are talking about 40 years of data here. I'll go even further just to illustrate the point. India's per capita income today stands at $3,000 per capita. And if you look at the economies and countries of US, Japan and China, when those countries' per capita GDP doubled from $3,000 per capita to $6,000 per capita, their stock markets did not just double. Their stock markets tripled or even quadrupled. And why did that happen? It's because when a nation transitions from being a low income per capita country to a middle income per capita country, the spending on basic essentials like food does not go up much. But the spending on branded discretionary consumption and financialization of savings, these two categories simply explode. We are already seeing this trend play out in the Indian markets. In April 2020, we had 4 crore demat accounts. Today, we have more than 17 crore demat accounts, which means that so basically 3 out of every 4 investors in the market today entered post-COVID. They have not seen a sustained or long-term bear market. For example, from January 2018 to March 2020 was a 27-month-long bear market in which the small cap index crashed 55%, mid cap index crashed 45%. And the index is falling 30% in 2-3 months and then recovering all of that back in a few months. That's not a bear market in my view. A bear market basically wears you out completely. It makes you lose your faith in equities as an asset class. No one wants to hear the word stocks anymore. That's what a bear market basically means. So many investors who have not seen a sustained long-term bear market yet, probably in the future when it does arrive, that is when you will separate the men from the boys, and that is when you will get to realize who really have the conviction in the India story. For example, if you look at any big name on Dalal Street, be it Mr. Ramesh Damani, Utpal Seth, Ramdev Agarwal, Manish Chokhani, or even Chandrakant Sampath, the legendary investor for that matter, all of them just have one common thread.
India bull.
And a relentless belief in the power of India, its future, and its entrepreneurs and business ecosystem. That's basically what gives them the really unwavering conviction through all the market cycles. You have to have this resilience and this conviction in something in life. That's how basically how you can bet and go all in. Otherwise, you will not be able to go all in, right? So, for example, all of my equity allocation is invested in my India fund in the US. So, I do not have even a single dollar invested outside my India fund. That's the level of conviction which I have on India. When I was working as a portfolio manager with Summit Global Investments for those 4.5-5 years in Salt Lake City in US, I did not put a single dollar of my own money into the mutual funds being run by the company because I did not have conviction in the stocks that investing in or the American stock market as such. But because I've got so much conviction in India and its future for the next 20 years, I was able to put all of my equity allocation into my India fund.
मैं छोटा सा बच्चा हूँ सर, and to compete against all these names that you say कि यार common thing है इंडिया पे बोलो ना. I am also a bull on India, right? कि यार इंडिया अच्छा करेगा. लेकिन जब आप कुछ न्यूज़ और कुछ नंबर्स ऐसे देखते हो कि आपके पास 17 करोड़ डीमैट अकाउंट है, लेकिन 22 करोड़ लोग तो ड्रीम 11 पे भी खेल रहे हैं, 80 करोड़ लोग हमारा फ्री राशन ले रहे हैं. So if you look at structurally, there has to be some structural change happen to pull out these people, the 80 crore people in India who are on free ration for the government, to give them, some money, some skills so that they can earn some money and then, spend in their consumer discretionary, branded item and stuff like that. We are talking about India Bull. लेकिन we are not seeing कि 17 करोड़ डीमेट में से कितने लोग ट्रांजैक्शन ही नहीं कर रहे हैं. 22 करोड़ तो ड्रीम 11 पे 10 रुपए का ट्रांजैक्शन कर रहे हैं, 20 रुपए का ट्रांजैक्शन कर रहे हैं, और 80 करोड़ तो फ्री ट्रांजैक्शन. तो हाउ डू यू अंडरस्टैंड दोज फैक्ट्स एंड देन स्टिल रिमेन इंडिया बुल when you don't see any structural change happening? What are you doing in order to get these people out of poverty and give them money so that they can spend in the markets?
The best way to grow people out of poverty, we already have precedent for this. If you look at what China has been able to do in the past, they have lifted hundreds of millions of people out of poverty. It's called the greatest economic miracle in the world, right? Similarly, in India, what is happening is, why do you think the government is putting so much emphasis on PLI and all the labor-intensive sectors? It's to generate employment. It's to drive this bottom of the pyramid people, up the value chain and start, helping them to stop relying on these free subsidies and free ration, and to move them into the workforce over time. And this is a very gradual process. And again, I mentioned something very important at the beginning of this conversation, that investing is all about the rate of change, right? Mm-hmm. So basically, where do you get the maximum rate of change? It's basically where there is maximum inefficiency or maximum scope for improvement. That is basically where the growth originates from. That's basically how I look at India as a market. So the more inefficiency or the more badly managed a company or an industry or a country is run, the more the scope for improvement. So I think India from here on, it can only go up over time. However, there are certain risks to the India story, which I've talked about in my previous interactions as well. That biggest risk in my view is geopolitical risk. Just recently, we were on the verge of going to full-blown war with one of our neighbors, and in that case, you would have seen a serious flight of capital out of the Indian market by foreign investors as well as some domestic investors as well. Second big risk which can derail the India story is political stability. So basically, right now you have a stable political regime at the center, but in the past, if you look at history, we have had eras of coalition governments, or in which the policy and decision-making process was very, very slow or almost absent, and therefore, India's growth and its prospects greatly suffered in the past. But as long as you have a stable political regime at the center, it can be either party. It's not, market is less focused about the party in power. It just wants stability at the center. That's what the market really wants. That also gives foreign investors a lot of confidence that decision making will be steady, much more faster, and reforms will keep on continuing. That's their big bet when they're investing in a country like India. Because when I speak to these local native, local Americans for my investing in my fund, you have to convince them, why would they want to take on so many risks when you invest in an emerging country like India, like emerging market risk, geopolitical risk, currency risk, corporate governance risk, regulatory risk. There are plethora of risks which you have basically underwriting when you're investing in a foreign country like India. I'm talking from point of view of these FIIs. So you do have to be adequately compensated for these risks that you're underwriting. So your starting point has to be to target a much more higher level of nominal pre-tax returns, so that after the Indian currency depreciation and after performance fees, the American investors still end up with a decent realized net return at the end.
When an American is investing in India, so first thing is, आपको capital appreciation चाहिए, the market return. And second thing, when you will convert his money back to dollar, he'll again get a hit.
Yes.
So it becomes a multi-edged sword. How do you do that? So Abhi, right now, how big is the fund?
Right now, the fund in the US is managing $26 million US.
And India fund?
The India fund is around 50 crore rupees INR. It was launched 2 years ago.
And in how many years are you able to double the money?
US-based fund has went live on 3rd October 2022. So we complete 3 full years in just a few months' time. So far, the results have been pretty good. The US-based fund so far has delivered a net return of around 71% in USD.
71%. Okay.
Total, in total, after performance fees in USD in the first 2.5 years. And the India PMS in the last 2 years has delivered a CAGR annual return of around 16%.
Very interesting. Two things here. Number one, these were long-term structural plays that you mentioned. And the second thing was the varied perspective plays, which is like 20%, which is basically for the alpha of the thing. यहाँ पर आपने एक बात और भी बोली थी कि कोई भी इन्वेस्टर की लाइफ में 2 फेज होते हैं, फेज 1, फेज 2. फेज 1 में आप बहुत ज़्यादा रिस्क लेते हो और अपना कैपिटल बनाते हो, और फिर आपको समझ में आता है भाई कंपाउंडिंग अच्छी चीज़ है, अच्छी क्वालिटी में इन्वेस्ट करेंगे और लंबे समय तक खेलेंगे. तो दिस इज वन थिंग जो मैंने बहुत सारे जितने भी बड़े बड़े इन्वेस्टर्स देखे हैं, राधा किशन दमानी सर, राकेश झुंझुनवाला सर, बहुत सारे जो पहली बार ट्रेडिंग करते हैं और अपना कैपिटल बनाते हैं और फिर फेज 2 में चले जाते हैं. आपने भी पहली बार फेज 1 में बहुत सारी चीजें करी थी, वो चीज समझाओ कैसे करते.
You rightly mentioned there are basically I talked about this in my second book, The Making of a Value Investor, that if you look at all the big investors in the Indian market, all of them have one thing in common. Phase 1, multiply in cyclicals and commodities and special situations, and phase 2, compound in quality. Basically, in my case also, before the January 2018 bear market started, for many years I used to take very high risks and I used to invest in illiquid micro caps, deep cyclicals, commodities, even high risk stocks with some patchy corporate governance. And I was very fortunate that I made a very good sum of money using that high risk approach when I was starting off with a lower amount of capital. But the bear market in India, which lasted from January 2018 to March 2020, on which my second book is completely based on, that entire experience ingrained in my mind the significance of resilience and longevity, which is the key to compounding. And I started to emphasize return of capital before return on capital. Capital preservation would take precedence for me henceforth, because the worst feeling as an investor is that when you make it big in life and then you lose it all in a bear market and come back to the starting point with no hopes of recovering, then you feel very dejected. What happens is, in a market crash or a bear market, both quality and junk stocks fall. Quality eventually recovers and bounces back to all-time highs over time with growing earnings, whereas junk stocks which you bought in the previous bull market euphoria, when they crash in a bear market, they stay low for many years until the next round of bull market euphoria takes over after many years. So it's much more, I think, productive and peaceful to have the bulk of your net worth and in equities in high quality compounders, which we talked about some time ago in long-term structural trends, because you don't have to keep recycling ideas every now and then. The problem with investing in low quality or mean reversion plays is that once your valuation re-rating has played out, then you have to sell that stock and again look for a new opportunity, and that increases the scope for error. In investing, less is more. The lesser number of decisions that you have to make, the better off you will be in the long run. So, entrust your capital to, companies with good longevity, good balance sheets, good capital allocators, and then just let compounding do its work.
Simplicity is the best sophistication.
Right.
सेकेंड वाली चीज़ के बारे में तो हम बहुत बात करते हैं, कंपाउंडिंग इन सब की, इस पर बनाएंगे. लेकिन मुझे जो साइक्लिसिटी है, बिकॉज यू अंडरस्टैंड cyclical industries and cyclical stocks very well. Number one, what's your circle of competence? कौन सी ऐसी इंडस्ट्रीज है जो आपको समझ में आती है, जिनकी साइकिल्स आपको समझ में आती है?
तो इसमें तो बहुत सिंपल है. देखिए आप, there's a great book edited by Edward Chancellor called Capital Returns, which talks about the capital cycle theory. अब you want to look for industries जहाँ पे capital flight हो रही है, capital is flying or fleeing the industry, going out of the industry, because that leads to a more consolidated industry structure, and competition acts as friction for value creation. So
Example in 2025.
What simple example? Previously, I used to think of airline industries as uninvestable, but with so many bankruptcies taking place across the industry in the last decade, now you're effectively left with just one single player, which is the dominant player in the industry.
60% market share.
And look at the wealth creation for shareholders as a result in the last 3-4 years. It has gone up multifold, right? Indigo. We don't hold the stock in our funds or the PMS, but the thing is, this is a classic example of how a traditionally cyclical industry turned out to be a source of wealth creation for shareholders who understood the capital cycle theory. The lesser competition there is, the better. Just today morning, we not a stock recommendation, but IEX, Indian Energy Exchange, today has crashed 28% intraday. We do not hold this stock in our funds or PMS, but just to give you an example that the government has basically announced a regulation because of which IEX will lose its monopoly power. It'll be more of a power broker, and the valuation multiple for an exchange versus a broker is completely different. That's why you're seeing such a, and now there'll be intense competition in this particular industry. So as a result, you're already seeing, the company losing more than 1/4 of its value in just one single day. So because of intense increasing competition over time. Same thing happened in the paints industry. At one point of time, Asian Paints was considered, invincible player, right? But when large amounts of capital equal to the or more than the entire gross block of the industry started coming in the form of very big conglomerates coming in, you've seen what has happened to the stocks of Berger Paints and Asian Paints and other listed paint companies over the last few years. That's why JSW recently acquired actionable, because they are realizing that we need to attain scale. And because the more fragmented the industry, the more problem it will be for profitability of all the players. So these are cycles. Once you study these industries over time, you start understanding it's all more about the capital cycle theory. This can be applied to any cyclical industry. So you asked which cyclical industries I have expertise in. Instead of developing expertise in one or two industries, just understand the big picture of how the capital cycle works. This can apply to any cyclical industry, be it MDF or this building material place or real estate, or any other cyclical industry for that matter. For example, banking industry is also cyclical. They go through the cycles of rising NPAs and declining NPAs, rising credit cost and declining credit cost. So you just have to understand how the cycles work across industry instead of just developing competence in one or two industries only.
In the spirit of Ben Graham, I want to know your highest conviction bet and how does it fall into your investment thesis. Out of 23, 24 stocks that you own, and of course, this is not a stock recommendation, but as students of investing, we want to know which industry, which particular company that you're betting high on and why.
So here, see, again, I'll just mention an example from my India fund. So, I think the top allocation today is Nuvama Wealth Management. This was, listed after the demerger from Edelweiss. And generally what happens in these demergers is that, when you have a crown jewel business inside a conglomerate in which other businesses are struggling, then the crown jewel business does not realize its true value, does not get the right valuation. But when it lists as a separate entity, initially there is some forced selling because, for example, people who invested in Edelweiss primarily invested for their capital markets business. But, this is a wealth management business. So, some people basically exited the stock of Nuvama on listing. There was some forced selling, but it listed at a very reasonable valuation multiple. So you have a big picture in your view that, okay, over the next 10, 20 years as India's prosperity grows, there'll be more requirements for wealth management players, wealth managers. And unlike the AMC industry, where basically the regulator is shrinking the profitability of listed incumbents over time, the wealth management industry is, much more less vulnerable to these regulatory, overhangs compared to the AMC business. So the industry structure is good, much more favorable than AMC. It got listed at a cheap valuation. You have a long runway for growth, so you can put a good amount of capital to work in such a business, and it's already gone up. I think 2 or 3 times for our fund, since it got listed. So as a result of the capital appreciation, it has become the biggest position in our fund.
Tell me about a company or a stock which nobody has heard of, but you are betting high on it.
Again, this is not a stock recommendation, but again, I'll just mention, I mentioned short while ago to you that there has to be an element of neglect.
Yeah.
So basically, when prominent companies basically go through long periods of neglect, then even a sharp or sudden acceleration in growth can lead to a valuation re-rating of the business. So recently, for our India fund in the US, we bought a stock called Piramal Enterprises, and it was trading at just below one-time book. So first tick mark, margin of safety is there. Promoter, Piramal family is already, well established. They went through a very bad cycle of rising NPAs because they used to do wholesale lending in the real estate industry. So they had a big pile of NPAs which got built up, bad debt, because of which the stock price got badly derated. But because of the severe liking for the business among investors, stock was available at below book value. And what many people do not realize is that now the retail book out of the overall lending book of the company is more than 80%. So from a time when 80% of the book was wholesale lending, now 80% of the book is retail lending, which is much more granular and much more higher quality. And plus, the management has given a very, very big growth guidance for this coming year. I don't remember the exact profit number guidance, but it's actually very large compared to the previous financial year. So as your credit costs improve, and the investors' understanding of the changing nature of the loan book of this company changes over the next 12 to 18 months, I think there's a scope for valuation re-rating. So this will again fall in one of the varying perception plays. One of them is product mix change. So here again, the product mix has changed from wholesale lending to real estate players to retail lending.
Retail lenders.
So I think there's a good, this was a very recent entry for our fund, very recent in this particular stock.
Tell me a highest conviction bet which nobody is understand or everybody in the market is neglecting, but because of your contrarian approach, you are able to play that structure. One was varied perspective play. Give me one for long-term structural play. Unknown, undervalue, neglected.
Well,
and how does it fall into your investment thesis?
I think India is going to give a lot of push to manufacturing over the next 10 years because there's so much inbound interest from global players as well who want to establish a manufacturing base here as they try to de-risk from China. China plus one is going to play out in a very big way. So I think overall the big picture again is that I'm very bullish on manufacturing as a theme.
Okay.
And one of the cleanest proxy plays to play the manufacturing upcycle over the next decade is CNC cutting machine or CNC machines. So our full disclosure, Stellarwell Partners India Fund holds more than a 1% stake in a listed company called Mac Power CNC. So we do. So that's again a business which is basically it's got a pristine balance sheet, good track record of it pays dividends, very high promoter stake of almost 75%. Past execution track record is pretty good. And when you hear the promoter on conference calls, then every time basically you just realize that this guy is a hardcore Gujarati businessman who's just focused on profitability and just the unit economics of the business. He's not chasing growth at any price. He's basically trying to create value by increasing his margins over time, and he's not just chasing growth for the sake of it. So I like entrepreneurs and promoters who like to grow with use of internal accruals, who don't dilute equity a lot or don't have to resort to debt. Basically, in bull market, what happens is promoters who don't value their equity, they start diluting their equity a lot. But equity is the most expensive form of capital. So you want to add, and that on the other hand leads to problems during periods of economic down cycle or distress. So promoters who like to just keep growing gradually over time with internal accruals tend to be those boring long-term compounders. We have many examples of this in the past, like Ajanta Pharma, Astral Poly, Mayur Uniquoters, which used to grow through internal accruals. I think this also falls in a similar category.
मैं जब इंटरव्यू में देख रहा था, I heard that this company called Raj Ratan Global, again not a recommendation, previous company, इस कंपनी में आपने आज तक सबसे ज्यादा पैसा बनाया. Is it true?
Yes.
दो सवाल. How did you hear about Raj Ratan Global for the very first time? And second, do you still hold it? Or third, when you figured out this opportunity, how much did you think यार इतना % मुझे allocate करना है?
It was a macro cap when I first invested in it. So, anyways, I invested some of my personal money in this company in June 2020. Over the next 2 years, it became a 20 bagger. But, when those big multi-baggers, I realized only in hindsight. See, if I knew that this was going to go up 20 times, I would have put a 10, 15, 20% allocation to it. But because it was an illiquid macro cap, I put in 3% of my overall portfolio to it at that particular point of time. So again, portfolio allocation is something which is less talked about. But over time, as your capital, as in your base becomes very large, then you start realizing the importance of it. That portfolio allocation is equally important as picking individual stocks. So after the stock went up 20 times, I could not sell it at the absolute peak. Probably made 16, 17x on it at the end, at the time of my sale. The reason for the sale was also very simple. From a period of accelerating growth, finally when the growth rate started tapering down and slowing down, and I took a exit in the stock. And I got to learn about the stock from one of my investing colleagues who's part of a WhatsApp group.
What's the name of the colleague?
I refrain from naming the colleague here, but got to learn about it from him only.
Got it. One of the eureka moments that you speak about, compounding, समझ में आती है. ऐसे समझ में आता है कि यार अगर आपके पास 10 लाख रुपए हैं, and if you are young, and if you compound that money for 25% CAGR over 30 years, you will make 100 crores. You understand that. But there is another eureka moment that you had where you basically figured out the positive asymmetry of compounding. Yes. Where the upside is convex and the downside is concave. Give us that eureka moment, number one. And second thing, give us a eureka moment that you had in recent years, in 2024 or 2025.
I'll give you so I'll explain the concept. So we often talk about the power of compounding, that, if you basically, 1 crore becomes 100 crores, in the next 20 years, if you compound at 26%. But in my view, the real power of compounding lies in its positive asymmetry. So basically, compounding is convex on the upside and concave on the downside. What does that mean? Means that compounding increases at an increasing rate on the upside and decreases at a decreasing rate on the downside. Let's say that you have two stocks with you. One grows at 26% for year one, and the other one falls by 26% for year one. The end result is 0 for year one, right? If this happens over 10 years, what do you think would be the end result in your portfolio?
मुझे तो पता है क्योंकि मैंने आपकी किताब पढ़ी है. It would be around 17 point something. Yeah.
It will be 17.6%. So in spite of one stock in your portfolio going to almost 0, you still ended up with a return of 17.6% at the portfolio level. This is where the real power of compounding lies for me. The real power of compounding lies in the fact that it empowers you to be wrong half of the time as an investor and still make very handsome returns at a portfolio level. So the key big takeaway for investors from this example is you have to let your winners run. Any investor who made it big in the market had one thing in common: they let their winners run and become very, very big over time. And
How do you let your winners run?
By simply focusing on the industry level developments and the quarterly earnings once every quarter. And also, if you have your thesis very clear for your exit from the stock, that makes it even easier for you to hold on. For example, gross capital misallocation. Suppose the fixed asset base of the company is 1,000 crores. Okay, at a very high return on invested capital, that 1,000 crores is earning good money for the company business. And the company suddenly announces a big capex of 500 crores, which is 50% of the existing gross block, which is going to be very low return on capital employed, low ROC investment. That's a trigger for you to exit, because investing is all about the future trajectory of the return on invested capital. So, but in case the company has announced a capex of only 100 crores and the total gross block is 1,000 crores, in that case, you can give some leeway to the management. Okay, it's only 10% of the gross block, in which they're doing a misstep. This much I can tolerate and live with. So I will not disturb the compounding process. I'll just stay put in the investment. That's the first trigger for an exit, which you have to know. Second big trigger for an exit is bad corporate governance practice by the company or short-changing of minority shareholders. So that's again a second trigger for exit. Third trigger for exit is if the company becomes ridiculously overvalued, for example, 150, 200 PE on a trailing basis. Then from there on, what you do is you keep a razor sharp focus on the earnings growth of the business from each quarter onwards. And the moment the growth rate starts decelerating sharply, then you immediately take an exit. Or you can keep a price stop loss. You can say, okay, if the stock falls by more than 15-20% from the all-time high price on a more recent basis, then I will take a exit. Or you can also make a technical rule, like if the stock breaches a 50-day moving average or a 21-day moving average, then also I will take an exit now that the stock is at a 100 to 150 P multiple. But whatever method you choose to exit, you have to stay disciplined to it. You cannot do that. You cannot have one rule for selling for one stock and another different rules of selling for a different stock. And worse still, you cannot neglect your own rules. Whatever rules you set, you have to stay disciplined to it over time. You cannot just keep changing rules because of any particular whims and fancies. Discipline is the essential ingredient of any successful investor in the market. So, capital misallocation, ridiculous valuation, sharp deceleration in growth, gross capital misallocation. These are some exit triggers. And as long as none of these exit triggers take place, you can hold on to your investment.
आप ये सारी बातें इतनी जल्दी जल्दी बोल रहे हो क्योंकि आपको ये सारी बातें रटी हुई है. यू आर द मास्टर. हमारे लिए पहली बार है. सो इस क्वेश्चन पे आई रियली वांट यू टू थिंक एन आंसर. जैसे आपका यूरेका मूवमेंट कंपाउंडिंग का ये था, व्हाट वाज योर रीसेंट यूरेका मूवमेंट इन और आउटसाइड इन्वेस्टिंग दैट ब्लू योर माइंड?
I won't say blew my mind, but I think one big learning which I've realized over the last few years is that the Indian markets reward growth and cash flows above all else. If the company is demonstrating very good growth and good operating cash flows, then even if the company has got a checkered past or some problems for the promoter in the past, eventually the market starts re-rating these stocks to a very high level. So there was a time when I used to just neglect these stocks altogether, not even look at them, without realizing that the fundamentals are changing, and over time the promoter behavior is also changing for the better. So I think this is one big learning which I have taken with me for the last 2-3 years.
What does this learning tell us about Indian consumer behavior or behavior of Indians?
I think it basically showcases the fact that now promoters are realizing the importance of market cap creation. Earlier, there was a culture of siphoning off money from the books through gold plating of capex or inflating expenses. Used to be a figure called miscellaneous expenses, in which all these expenses used to be stuffed into, and then money used to be siphoned off. Now, the new generation promoters are more interested in showing a higher net income number and improving the working capital, so that the operating cash flows are positive and the return ratios are also good for the company, because that leads to a very good wealth creation for themselves as well.
Tell me a high quality business, a super high quality business that you don't own.
Asian Paints, for example, very high quality.
Why don't you own it?
Because of intense competition in the industry. But Asian Paints remains a very high quality business. So what is a high quality business? It has 3 ingredients. Number 1, it has to have a high return on invested capital above the cost of capital, because that difference gives you the free cash flow yield. Second, it has to have some form of a competitive advantage or a moat, which enables you to sustain that gap and enjoy that free cash flow yield for a long period of time. And third and most important, it has to have sufficient reinvestment opportunities inside the business at high returns on capital. That is how it becomes a compounding machine.
But you don't own Asian Paints. Why?
Because like I just mentioned a short while ago, that investing is all about the future trajectory of the return on capital employed. As more capital comes into the industry, the aggregate return on invested capital of all the players will start going down, and therefore that's how you've seen the valuation derating happening in Asian Paints. Plus, when I'm investing for my fund, I'm requiring a minimum growth in top line of 20% or more, and Asian Paints is now growing at barely double digits, so it's not meeting my growth criteria also.
If a business is great business, that does not qualify as an investing opportunity.
Correct. A great business is not necessarily a great stock. We have had many cases of stocks in the past, like Hindustan Unilever in the 2000s gave 0 return for a decade, right? So, you have to pay attention to the starting valuation and the future growth prospects of the business, because investing at the end of the day is simply a probabilistic bet on what lies ahead in the future.
Moat की आपने बात करी, sir. Give me a case study on moat, on a particular type of moat which fascinated you. About any business, कोई एक ऐसी business की मोट बताइए जो generally appreciate नहीं होती है लोगों से, लेकिन आपने जब उस मोट के बारे में पढ़ा, तो it was a eureka
One of
moment.
the big winners in our India fund and PMS in the last few years has been a stock called MCX, Multi Commodity Exchange. Again, this was a stock which fell into the neglect category. For many years, they had a lot of teething problems with their software, and because of that, plus once the options got introduced by the company, options trading got introduced, that led to a tremendous amount of operating leverage. And as a result, net profit growth exploded for the company in the last few years. So this company has almost 100% market share in commodities exchange trading in India. That tells you all that you need to know about a moat. So any company which has got supply side dominance, more than 50-60% market share in a particular industry, has to have some form of a moat. It can be a moat of a low cost producer. It has to have some moat in the form of a switch, very high switching cost, or very high brand loyalty, which gives it pricing power. Supply side dominance or high market shares itself, lead you to companies with very high moats.
Makes sense. A lightning round. Tell me your most favorite book published by Columbia Business School. Of course. of course. Apart from this one.
I would say The Book of Value by Anurag Sharma is a classic. It's a very, very good book on understanding valuation.
एक book non-published by Columbia Business School भी बता दो.
I would say
ऐसी कोई किताब का नाम लेना, मत लेना, जो आपने पहले ही बता दिया.
No, Investing for Growth by which is a compilation of letters written by Terry Smith. It's again a very good book for quality-oriented long-term investors. So that's a book I would recommend. Plus, You Can Be a Stock Market Genius by Joel Greenblatt. It's a masterpiece on understanding how to do special situation investing.
So these two people, I think, and there is another people, Edward
Chancellor's Capital Returns, yeah.
who had significant impact on you.
Yes.
Tell me, of course, you're a very unique person, sir, but who do you find your investing style closest to in Indian market and US market?
I would say it's a mix of Terry Smith's quality investing plus Joel Greenblatt's special situation investing.
In India? Who do you find your investors closest to?
I think, because bulk of my portfolio is in quality long-term compounders, so I gravitate naturally towards, people like Manish Chukhani, Ramdev Agarwal, Mr. Ramesh Damani. So their investing philosophy really resonates a lot. And Mr. Bharat Shah of ASK, he's a proponent of quality investing.
Any M&A or special situation that you're looking at right now?
Special situation which I have invested in just recently is VIP Industries. I think they have been taken over by a private equity player called Multiples Equity. I think, which is led by Renuka Ramnath, and they have a track record of wealth creation through improving efficiencies of their acquired companies. And in this promoter management in situations, the biggest delta or biggest rate of change happens when the underlying business is being grossly mismanaged. So you want to ideal. So if the company being acquired was already being run successful pretty well, for example, JSW acquired AkzoNobel. If you look at AkzoNobel's past margins, you'll see that the margins are pretty steady in double digits. The company is a pretty decent, efficient company. But in a VIP Industries case, the business was in losses. It's in negative margins. So you have the low-hanging fruit of margin improvement. These private equity players, the moment they acquire a business which is being mismanaged,
cut cost.
They start cutting costs. You get the first round of valuation re-rating from there. After that, they spend a lot on advertising and marketing and sales, and you start getting top line growth. That leads to the second round of valuation re-rating, and finally, at the end of 5 years, 6 years, they sell the business to a different player, and then they exit.
If I, as an investor, want to play this very perspective play, that a private equity player like a multiples is acquiring VIP Industries, and I see here earlier it might be a mismanaged company, but because PE coming in, there will be multiple value unlocks that will be happening, and other things that you mentioned. How do I look at the risk associated with this particular play?
Right. So investing is never black or white. It's always shades of gray. And in investing, we all have to live with the risks that we can understand. In case of VIP Industries, it belongs to the organized luggage industry in India. What is the biggest risk to the organized luggage industry players? It's increasing competition from the private side, especially those being well funded by private equity and other sources of private capital. And like I mentioned, competition acts as friction for value creation. So again, there's a possibility that in spite of their best efforts, multiples equity may not be able to turn around VIP Industries, and it may remain a loss-making enterprise. However, if past history is anything to go by, generally when these private equity players take over a loss-making business with a very good legacy brand, generally they just try to undo all the mistakes of the past management. That is how you get the margin improvement and the top line growth coming back into the business. At the same time, because of the risks that I mentioned, you have to size your position appropriately and accordingly. So the higher the risk, the lower the allocation. In this case, for example, because the new private equity player has just come in and the cases will take time to play out over the next 2-3 years, I've started with the initial weight of 3%. But over time, as the improvements start becoming visible, I'll start increasing my allocation. And in these situations, you also have to keep what is called a time stop loss. So let's say that over the next 4 quarters, let's say sufficient time. Over the next 4 quarters, if there is no margin improvement, then you take an exit because there is no improvement happening. Generally, in these special situations involving private equity, the first lever they pull is margin improvement by making the operations more efficient. So that is a key metric that I would not look at top line growth for the next 4 quarters. I would focus more on margin improvement trajectory. That will give me conviction to hold down to my position.
Very interesting. Tell me another varied situation play that you are considering playing right now.
I'll just mention 2 of them to you already. Product mix change was Piramal Enterprise, and then promoter management change was VIP Industries. These are the only 2 plays at the moment.
Tell me about the biggest investment that you have made on yourself.
In myself or in the stock market?
In yourself.
So myself, basically, I've talked about this in my past interactions and interviews also, that when I was working for minimum wage as a front desk hotel clerk in San Francisco, then for those 15 months, every night I used to read every single blog article published on blogs like Safal Niveshak, Fundu Professor, Basic Investing, Microcap Club, and Chana WordPress. And for the first time since the beginning of my busy investment banking career, I finally got time for myself to read and learn and become a wiser investor. This is basically what I was lacking in my initial years in the market, that I was very well educated academically. I was I'd done the Indian CFA, I was an MBA in finance, I'd also become a CFA charter holder. All academically I was very good, but I lacked the intellectual foundation in investing. In the investing field, just degrees will not do the job. You have to actually practice it, make mistakes early, learn from your mistakes. And the difference between good and great investors is that all investors make mistakes, but the great investors repeat old mistakes less often. So basically the idea is to have document all your mistakes as you go along the way, so that you do not repeat the same mistakes again and again. And that's basically how you improve. That I think the best investment you can make is an investment in yourself and in your knowledge and in your relationships, because these will pay rich dividends to you over time.
2 things. It'll be a recent best investment that you made on yourself in last 2 years.
In the last 2 years,
Think about this and tell. No rush.
I think the last 2 years.
That can be an experience that you took for yourself. That can be, paying for the Omaha ticket, whatever.
But I've been going to the Omaha shareholder meeting of Berkshire since 2016, so that was not a recent thing. But I think one of the good things which I did for myself in the last 2 years, which has made me a lot of happiness, that I bought my own house in the US. Didn't take any mortgage or loan for it. Just bought it. That too, I bought it in my dream location in Atlanta, Georgia. So I think that is something which has given me a lot of happiness.
Compounding, हमने इन्वेस्टिंग में सीखी. कंपाउंडिंग जो मशीन, जो लर्निंग मशीन होती है, नॉलेज में जो कंपाउंडिंग होती है वो होती है. रिलेशनशिप का भी एक आपने एग्जांपल दिया था पहले. गिव मी अदर एग्जांपल ऑफ कंपाउंडिंग in a very different aspect of life.
I would give the example of compounding good habit, for example. In the US, when I reside, I maintain what I call a gratitude journal. And there are two sections, morning section and a night section. The morning section, there are 3 sections in that gratitude journal. Three things that I'm grateful for. Then the second thing is what would make today great. Again, 3 things you have to write there. And the third section in the morning part is positive affirmations. So every day I fill up these 3 sections in the morning, and at night the last 2 sections are 3 good things that happened today and 2 things that I learned today. So when you document so many things on a daily basis throughout the year, and over the years you accumulate a vast amount of documented experiences and learnings, then when you refer to them, then you start realizing just how long a way you have come in your life. I think that's a good example of compounding good habits in action.
Read my next question. What did you fill in your gratitude journal yesterday night?
Yesterday night, filled up in my gratitude journal. Yesterday night or yesterday morning?
Yesterday night.
Then I have to just go back and refer to it again. Not recollect it like that. But see, I'll just give the broad picture here that there are so many things to be grateful for on a daily basis. Things that we take for granted. Access to clean drinking water, clean air, good roads, a good home to live in, loving parents, a good spouse, very, healthy relationships, good friends, close friends in your circle who remember your birthdays, your anniversaries, who do things for you unconditionally and out of love. There's so many things to be grateful for on a daily basis. These are things that many people in the world dream about, which you're already having in your life and which you just take it for granted. So I think one good habit to develop is that when you like something that someone is doing, just appreciate them there and then. Don't be stingy with praise. I think it would be healthy not to praise people easily, but I think you just praise someone for the good things that they're doing in your life. It just uplifts them as well along with you.
Very good point. I try to do this. And I genuinely try to do this, but sometimes people feel you're doing just to get something out of it. They don't understand you're not getting anything. So I was meeting a professor. I just went and appreciated. He was like, "What do you want from me? This is flattery." I was like, "Sir, I'm not doing any flattery. I don't want anything from you." So what's the balance point? Because this is a very interesting point. Appreciating makes someone's day. Appreciating someone who has done something for you at the instant is a superpower, right? But at some point, to some people, it feels flattery. What's the balance point that you have maintained in that?
In the Jaws of Compounding, in the section on compounding positive thoughts, I've talked extensively about the power of gratitude. And that gratitude is the most effective way to find contentment. And I think, if you do this sincerely, over time, what will happen is you'll attract genuine, authentic, like-minded people into your life automatically. If someone is, having doubts about, your integrity or your intentions when you're helping someone unconditionally or praising someone, you cannot change the thoughts of that person. We can just do one thing as investors and as human beings. Trust the process. That's my mantra. I got a lovely painting in my office in Atlanta, home office in Atlanta. It reads, trust the process. It's all about the process. You just keep doing the good work on a daily basis, day in, day out, without really getting bogged down the intermittent failures. Over time, the end result is bound to be pretty satisfactory. That's my personal feeling.
What is one recent mental model in your life that you have applied, which has changed your quality of life or quality of decision making at a drastic level?
And basically, in fact, I posted this on my Instagram story also recently, that I'm at an age in my life now where I do not mind paying a premium or paying more for convenience. Basically, earlier it used to be very calculative, trying to, it's more of being penny wise and pound foolish. Now that is not the case anymore. I am more than happy. See, the purpose of life is to be happy and comfortable. And there's a great book I would recommend to all of your audience. It's called Die with Zero by Bill Perkins, in which he explains that every decade of your life is meant for a particular kind of experience. as when you're in your 20s, then in your 30s, then in your 40s, then in your 50s, for in each decade you're supposed to collect a certain set of experiences, and there's a right time for everything in life, right? So basically, if you can afford to do something that you want to do and which you love to do it. Don't even think twice. That's the biggest change in my thinking in the last few years, last 2 years, I would say.
I think one of the other quotes that I read in your book by someone, I am not remembering it, but it was in the context of philanthropy, where if you die rich, you die disgraced.
I have not mentioned that in the short.
Are you sure?
Yes.
Okay. So then मैंने कहीं और पढ़ा होगा. But talking about the experiences, sir, what was the best experience, one of the best experience that you had in your 20s, 30s and 40s, which you would recommend everyone to do in these particular age brackets? Think about this.
I think in my 20s, I would say the best experience was with friends. Obviously, it was I had a great time with my college friends, and school friends. That was a good memory which I have. In 30s, I've got a great memory of getting married and enjoying married life. In the 40s, I would say, having reached a certain level of net worth and financial independence and buying my own house in the US, that's again given a lot of happiness, and also being able to do a lot of things which I wanted to do for my parents, especially. We Indians have this genes that we want to make our parents proud and do things for them in their old age. So at different stages of your life, these different things give you meaningful happiness.
What's the best thing that you believe that you have done for your parents?
I think getting them their dream home in Calcutta was something which I'm really happy about. For sure.
In this age of AI, sir, when we have ChatGPT, so there are two things: using your brain as a processor and using your brain as a storage. When we have devices, we want to use our brain as a processor and not storage. And as you mentioned, आपने बहुत सारे आइडिया जनरेशन की चीजें बताई, आपको BSc की फाइलिंग. यहाँ पर दो सवाल. पहला सवाल, if as an entrepreneur, if I build you something using AI, which basically feeds every idea generation source, like the BSc website, like the blogs at where you pick up, and gives you distilled things, will you pay for that? Number one. Number second is, when you have ChatGPT Pro, would you rather read the whole book, or would you rather, put this book into the Pro and get the summary, get the anecdotes? What do you do? Two different questions. Take your time and think it, whichever you want to.
I'll answer the first question here. That's the easy one. So basically, I'm already subscribed to such a service which you mentioned. It's called The Wrap by Tariq.
The
Wrap. I would highly recommend it to all serious investors in the Indian stock market. I think subscriptions to Screener.in, The Wrap, and SOIC. I think these three, once you have subscription to these three tools, you're broadly all set to become a lifelong learner and a successful investor in the Indian stock market. So these resources into a shorter form and making it more convenient. So I do have subscriptions of these three tools. And regarding the second one, in my Georgia compounding, I've also mentioned that there's something just so much peaceful and calming about reading a physical paperback or a hardcover. So I would not put all this into electronic form. I would any day prefer to have the physical version with me.
Got it. Tell me, if you have to pick one investor, who is the investor of the greatest of all time? Who do you pick?
And that's easy. Warren Buffett, no doubt about it. He compounded at a healthy double-digit rate of 18% for 60 years. He played the game for the longest time and became the biggest winner. So that's the key to compounding, the longevity.
Not at all contending your thing, but मैं जब ये देखता हूँ और जब मैं इंडिया में देखता हूँ राकेश झुंझुनवाला सर को 64% or something compounding for 40 years. Warren Buffett or Rakesh Jhunjhunwala, like next level. It's three times. Why is Rakesh Jhunjhunwala not considered the greatest investor?
Because he did not play it for the longest time. He died at a very he died early, exactly.
But if he would have lived, he would have been far better than Warren Buffett, right?
That is something which will not get to know actually.
But not contending your fact, I truly believe in what you said. Warren Buffett being the great. Tell me, if you were to bet, we spoke about a lot of your thesis on companies. If you were to bet on a young person that you believe this guy will become, or this guy will beat the track of Warren Buffett, is it easy to predict? Have you seen any young person like that?
I haven't seen any such. Because see, the thing is, Warren Buffett started when he was, I think, between 9 to 11 years old. So it's very difficult to find someone like that at such an early age. So but this is something which will only get to know with the passage of time, because it's the Buffett built his reputation and track record over 60-70 years. Yeah, and by definition, a youngster would just have 5 to 10 years of track record behind him. So that's compared to Buffett's long-term track record, that's frankly nothing. You have to be present in this business for a few decades before people start calling you a great investor.
But let me frame this way. आपने इतने सारे बेस्ट इन्वेस्टर्स का नाम लिया. These are investors who are known by the world they are great. Tell me, have you met or have you seen, because you have been going to Berkshire Omaha for so much time, seen so many investors, have you met any underknown, underappreciated young investor that you have, that you believe this guy has the ability to do something? If you were to bet on underknown, undervalued, underappreciated young investor that the world doesn't know about, but you have deep convictions about them, who did it?
So I met a few people from the investing domain, like John Huber, who runs Saber Capital Management. He's a proper traditional value investor who invests in the US market, and he has a pretty good track record of wealth creation for his investors and his fund. Very sound process and good clarity of thought. But again, these value investors by definition go through their own cycle. Sometimes their style is not in favor. Sometimes their style comes in favor. But I think what I like about him is that he's very disciplined in his approach. Sticks to value at a good quality at a reasonable price. And his particular style of investing is buying stocks of good quality companies when the share prices are beaten down due to temporary problems. That's when he basically invests in these quality businesses, simply waits for them to recover, for cycle to turn.
Any Indian name that comes to your mind, sir?
India, well, basically, we have to look at the leading players in the PMS industry. You have got Mr. Gurmeet Chadha of Complete Circle. And then you also have Neil Bell of Negen Capital. You have Amit Jeswani from Stallion. You also have Deepak Shonai from Capital Mind. There are many well-known investors in the Indian market who have built a good long-term track record. And you also have investors like Samir Arora who are not based in India, they're based in Singapore, but even they have a good long-term track record. So I think these are investors, from young to middle age to learn from and to keep improving it. Basically, this business is all about relationships. It's all about building your connections, building your relationships with such people. Arvind Kothari of Nivesha is also one, very promising investor who invests in startups and pre-IPO stage as well. So I think over the years we'll get to hear about a lot of new names in the industry.
You got it. Two things here. Number one, आपने एक स्टोरी सुनाई थी बहुत तरीके जब आपने ट्विटर पे किसी को मैसेज करा था and they were trying to do something at the table they were signing and they invited you. But if you can tell me, as a young person, how do you go ahead, as you mentioned, relationship building, right? What are some ways that you have used? Tell us some stories, some incidents, which has helped you making good relationship with people that you learn from now.
Well, Ian Castle is a good example. I've talked about his story that he has a compounding goodwill also. That how he used to send him useful articles, posts, and good documents to read. And then when he hosted his first microcap conference in Chicago, and there was a big, very prominent, high-profile dinner which was being organized by him, which included many prominent names from the industry. And he invited me to join for the dinner, where I got to know more prominent people like Morgan Housel and other people. I think this is a good example of, again, Ian Castle I look forward to even today for learning about the microcap space and about what qualities to look for in a promoter entrepreneur. But many years ago, when he did not even know me, I tried to build a relationship with him by being helpful and useful. See, when in LinkedIn, you'll often notice that, many people do this cold messaging that, they just ask you that, okay, sir, this is my resume. Can I get a job with your company? Without building a relationship with you in the first place, you have to add value to the other person and be respectful of their time. And if they understand that you're sincere and hardworking, automatically they'll become interested in associating with you. But you cannot just blast them with your resume and just asking for a job straight away. They don't even know you right now. Relationship building takes time and effort. Nothing good comes easy in life. You have to put in the time and effort.
How did you, when you got invited to the dinner, then continued to invest in your relationship?
Again, basically what I do in the US, for example, like there are certain people, I don't want to name them right now, but they have played a critical and big role in my growth in the professional world. So what I do is every year I mark their birthdays on my calendar. So just on their birthdays, I send them some very meaningful gifts. I don't just send them any random gift. I know what that person is interested in, what things hold value for that person. Then I put some time and effort into selecting a nice, appropriate present or gift for that person and send it to him. Then on the holidays and Christmas is a big thing in the US. So Christmas, I send them some nice confectionery and sweets and chocolates and other stuff. So this is just a way of keeping the relationship going and letting them know that, okay, I care. I haven't forgotten about what you did for me in the past. I care for you. You will always remain special to me, and I want to continue doing this for you throughout my life.
सर मैं भी यूएस इंडिया आ रहा था, मुझे मीनिंगफुल गिफ्ट लेके आना था. मेरे पास आपके लिए भी एक गिफ्ट है, लेकिन मुझे उसको बनाने में टाइम लगेगा बिकॉज दैट्स रियली मीनिंगफुल बट वेल थॉट ऑफ व्हिच यू विल लाइक. बट जब मैं आ रहा था तो मुझे बहुत दिक्कत हुई मीनिंगफुल गिफ्ट ढूंढने में. गिव मी एन एग्जांपल ऑफ अ मीनिंगफुल गिफ्ट दैट यू हैव. वी रिस्पेक्ट योर प्राइवेसी फॉर द नेम ऑफ द पर्सन, बट टेल मी a meaningful gift that you have given.
For example, like a particular person and I'm not friends with, he's very fond of hiking and trekking. So I'll send him some nice hiking and trekking gear. So that's like an example of a meaningful gift. If I have to give a very meaningful gift to a value investor friend in the US, there are certain lesser known books or lesser known coffee table books about Warren Buffett which I know about. So I basically send it to them. They're not readily available on Amazon. You have to search through different websites.
Okay.
There's a coffee table book called The Oracle of Omaha. It's a lesser known, but it's got such a great collection of pictures of Warren Buffett from his personal life from his early years that many hardcore value investors simply, whoever have gifted that particular coffee table book, they've loved it so far. That's a good example of a meaningful gift. See, you have to put in some efforts. It has to be something unique and different. That's what makes a gift very meaningful.
An other book which is not readily available on Amazon, but you know about it.
So margin of safety by Seth Klarman, that goes for thousands of dollars though, but that's not available on Amazon. That's if you can somehow find it at a cheaper price, then you can send it to someone if you want. Then Bharat Shah's book, previous publication, it's called Of Long-Term Value and Value Creation. That also is the PDF is available in the market, but if you can find a hardcover of that, that's also a very meaningful gift. Or what you can do is you can print it out and then bind it and send it to someone. That's also a very good read.
Thanks for telling me that. Will you go to Berkshire Hathaway after one?
Tough question. Maybe, maybe not. But next year I may just go one last time, even though Warren Buffett will not be on the stage. Because I think there are certain people I've been meeting again and again repeatedly over the years just once in the entire year at that particular venue. So probably I'll just meet them next year just to thank them for all the good memories that I've had with them.
The friends, only the friends in your network.
In the investing friends. For example, Todd Wennings, he lives in Ohio and he's written a great book called The Dividend Edge. It's a great book on dividend investing, and I've learned a lot. He used to previously write a very good blog as well when he was part of Intrinsic Investing at Ensemble Capital. But whenever I meet him, we always exchange pleasantries and I thank him for all the learnings from him in the past. So probably I'll meet him next year and just to personally say thank you, nothing else.
Do you know Rishi Gosalia sir by any chance? Have you heard about it?
I've interacted a few times with him. Do not know him that well personally, but I had to have interacted a few times with him. Very smart person.
So मैं उनसे मिल रहा था, and he narrated me a story that he was sitting right next to, once he was attending the conference. He was sitting with someone, उनका interaction हुआ, and then later he got to know that the other guy is literally a billionaire. And these are the kinds of people that you meet in Oman. Have you had any similar or very fascinating interaction with an unknown person in Oman?
No, not really. Honestly, not really.
God. एक चीज पूछनी थी सर. होल्डिंग कंपनी मेरा पर्सनल डाउट है, नॉट अ स्टॉक रिकमेंडेशन. बहुत सारी होल्डिंग कंपनीज ऐसी होती है जो बहुत अच्छे डिस्काउंट पे मिलती है. जैसे एक एग्जांपल है महाराष्ट्र स्कूटर्स का. दे होल्ड सम शेयर्स इन बजाज फाइनेंस एंड दे आर अवेलेबल. वेरी इन होल्डिंग कंपनी में इन्वेस्ट करना इज वर्थ इट और नॉट? इनका वैल्यू अनलॉक कैसे होता है? इस पे कुछ थीसिस है क्या सर आपके पास?
इससे सिंपल है. व्हेन द डिस्काउंट टू द अंडरलाइंग बिजनेस इज एट अ रिकॉर्ड हाई ऑफ ऑल टाइम. सी लास्ट 10 years का एवरेज निकाल लो, कितना जनरल डिस्काउंट रहता है. मान लीजिए 60% डिस्काउंट रहता था ऑन 10 year एवरेज बेसिस, बट करेंटली इट्स 18%. दैट गिव्स यू सम मार्जिन ऑफ सेफ्टी. And the single biggest thing when investing in the holding company is that you have to have a very positive view on the underlying business. For example, for my India fund in November 2022, I invested in a stock called Equitas Holding, which was a holding company of Equitas Small Finance Bank, and there was a merger arbitrage situation. It was going to be merged with Equitas Small Finance Bank. There was a merger arbitrage of 15% on the table, but I had an underlying positive view on Equitas Small Finance Bank itself. So first you have the merger arbitrage discount of 15%. Equitas Small Finance Bank was trading at a cheap valuation multiple of just 1.5 times price to book. Plus the banking industry was undergoing a tailwind that time. So when these three factors come, you're basically stacking the odds in your favor at multiple levels. So I made Equitas holding a sizable position in my fund. So merger arbitrage situations is when you can invest in a holding company The second situation is when the discount to the underlying business is at a record high, and the underlying business is also doing pretty well.
This is very interesting. But why do generally holding companies trade at a discount? It's a very dumb question, but what's the reason?
Because they don't have any operating business. They are just a shell company, basically officially shell company, just holding the shares of an underlying different company.
But that underlying thing has some value in it, right?
Look, investors and foreign and institutional investors especially prefer to directly buy the underlying business. The holding company stocks in India generally, if you see, are very illiquid.
Very
And institutional investors, for them, liquidity or trading volumes is a key consideration. So automatically they gravitate towards the underlying business itself.
Makes it. Any holding company that you hold now in the fund?
At present, no. Not at the moment.
एक लास्ट चीज करते हैं सर, अपन ने ट्रांसमिशन डिस्ट्रीब्यूशन स्पेस के बारे में बात करी थी, एआई के स्पेस के बारे में बात करी थी. इसमें भी इफ यू कैन गिव अस एन एग्जांपल ऑफ अ कंपनी दैट यू होल्ड, उसकी क्या थीसिस थी, उसका क्या स्टार्टिंग पॉइंट था और वो आपकी थीसिस में कैसे बैठता है? AI transmission power.
Transmission is basically this is a big picture thing that across the world, not just India, across the world, transmission distribution plays are gaining prominence. But one of the bigger holdings in my fund and in our PMS is a company called Silchar Technologies. It's not a T&D player, but it's a transformer company. Globally, the lead time for ordering transformers is very elongated because of supply-demand mismatch. The demand is through the roof, where supply is not being able to keep up. So Silchar Technologies is a transformer company to play the power cycle. Again, not a stock recommendation. We hold this in our India fund and on complete cycle level PMS. But this is stock which has given multiple returns in the last few years. And also in transmission distribution, there are certain players that you can actually look at. You can look at Skipper Limited. You can look at Techno Electric. You can look at Rajesh Power. Not stock recommendations, but you'll basically, once you read an annual reports and credit rating reports, and you'll get an idea into the future prospects of these businesses.
How did you first hear about the Silchar thing?
I heard about it from basically read on Value Ticker, to be honest.
Very interesting.
That's how I got to learn about it.
And what about the water treatment? How did you come from first principle? This thesis ki yaar AI, power, power generators, water के अंदर ये. What was the starting point of the
starting point for that was a video on CNBC international channel on YouTube. For there itself it was 10-minute video. Before that video, I didn't even know that water was going to be a big beneficiary of the AI boom. But these data centers do consume a lot of power and water, and that's what's leading to a big demand for these water recycling plants and water treatment companies across the world.
उसके बाद जब ये पता चला, water treatment companies आपने सारी देखी. Which company that you bet on?
I didn't buy any company yet because the working capital. I was not too comfortable with the working capital situation, but I did study stocks like Vatik Babak and Just Engineering.
Vatik Babak is, I think, owned by some other very prominent investor in the country, which is giving very high return recently.
But I have not invested in these two companies, not tracking them actively, but I think the prospects look pretty decent.
Tell me about a business that you love and you would 100% buy when it did it. If there is any situation, something bad happens to the market, you will definitely, I'm going to, buy this business.
Well, I think any business which is having very accelerating earnings and reasonable valuations, that is the business that I would bet on. And we are just at the start of the earnings season, quarterly earnings season right now. I think I'll be better able to answer this question of yours once this current quarterly earnings season is over. Because if a company's earnings is going up, but the stock price is going down, then that stock becomes a coiled spring. It's just waiting to burst and it go up very, very fast, once the market stabilizes.
And how do you identify? Just look at the
earnings and the valuations.
हाँ, ये important बात करनी थी. Last एक important सवाल. This is a mind-blowing fact that I got from you. 1926 to 2018, 92 years, only 4% of the equities catered to the 100% of the wealth creation in the market. I think similar number was for India for 18 years, 1992 to 2018 or something.
1990 to 2020, only 1% in India is even more concentrated. Only 1% of all listed equities accounted for 85% of the wealth creation, market cap creation.
Then there was another fact, again from you, that every 1 out of 5 companies in BSE was
attend value in the last 10 years.
तो तीनों फैक्ट को कंबाइन करते हैं और लर्निंग निकालते हैं. क्या समझ में क्या आता है इन तीनों फैक्ट्स के करने के बाद? दिमाग में क्या पल्ले पड़ता है?
It's all about active stock. Basically, India and the US are great stock markets for active stock pickers because and again we get to learn the importance of letting your winners run. Since only a small, negligible, tiny percentage of the overall listed space is accounting for almost all of the market cap creation over time, it's essential that if you want to become a big investor by net worth over time, that you have to let your winners run and become very big. The idea is to identify them at a small cap or mid cap stage, and if they have supply side dominance or market leadership and good ethical managements, and more importantly, if they're operating in industries in which you know that the management in their interactions or in the annual reports are hinting that they can pivot into adjacent areas, that itself can be also be a big source of value creation for shareholders over time. For example, Astral Poly, ventured into sanitary ware, adhesives, various other adjacent areas from their core business, and over time, that created so much value for shareholders. So this pivoting into adjacencies is a source of very big value creation if you can catch it, and if you can stay put while the company is executing that transition, then you can make pretty handsome gains.
Last question for the day. You have to think, and only one condition. You have to answer it very, very uniquely. What did the bear market taught you?
Resilience and the importance of investing in quality and prudent diversification.